It's time now for Mortgage Matters with your host, Bill Sandvig. Bill Sandvig serves as market leader, running the South Carolina coast for Movement Mortgage. Movement finished 2014 ranked as the #1 mortgage company in purchase mortgages for the Charleston Tri-County area. And they're still growing. And now your host of Mortgage Matters, Bill Sandvig.
Hello, Charleston. I am glad to be back on the air with you guys this week. Got a very special show, an excellent guest today, Michael Gobin. Michael Gobin is a team member of mine with Movement Mortgage, and he is a specialist, an expert in only two specialty products. One, reverse mortgages, the other, renovation mortgages. He knows everything there is to know about it. Everything I've pretty much ever learned about the two products have come directly from him. And Mike, thank you so much for coming on the show.
Good morning, Bill. It's great to be here. Hello, Charleston. Hopefully we can answer some questions for you all today.
Yeah, we're going to really encourage everybody to call in today. We want to talk to you guys, address some questions, some really big changes coming up in the reverse mortgage world. And for many of you listeners out there who might have been thinking about doing a reverse mortgage, your opportunity could be running out. Reverse mortgages aren't going away, but the opportunity is changing. The rules are changing, and we're going to talk about that a little bit later in the show. If you have any questions for Mike and I as we go through this, please reach out, 843-556-1250. That's 843-556-1250. We want to talk to you. You're out there. You have a mortgage. Call in with some questions. You're thinking about getting a mortgage. Call in with some questions. You're thinking about buying property and don't know if you should get a mortgage. Call in and ask some questions. We're here to talk to you. We're looking forward to talking with you. My name is Bill Sandvig. You can reach me anytime during the show or after the show at my cell phone, 843-300-7870, or you can go to my website, www.lowcountrylending.com, and I'll be happy to talk with you after the show or during the show. So I want to start this show off with talking a little bit about Movement Mortgage, the company that I work for, the company you work for. Lots of experience in the mortgage industry. Mike, how long have you been in the industry?
Close to 25 years now.
So 25 years. I'm a baby compared to you. I've only been in it for a fraction of that. But I have never worked for a company like Movement Mortgage. I've never worked for a company where the focus was not just on profit, not just on getting the next loan, but the focus was on the consumer, the focus was on the customer. And that's a real distinct change, and it really is what's led to Movement's unprecedented growth in the industry. Movement Mortgage was founded in 2008 with 10 guys in a garage, basically. 2008, if you're out there, you're thinking, what a bad time to start a mortgage company. The mortgage industry had started to crumble, and all rules were tightening up. It was getting stricter. The economy crashed. Things started to fall. Foreclosures went up. Jobs, people were losing work. And in that time, Movement Mortgage was born. And the founders of our company, Casey Crawford and Toby Harris, they saw a opportunity. They saw opportunity in the fact that because of all the issues and all the problems that had happened in the mortgage industry, there was about to be layers upon layers of federal regulations that were going to change our industry forever, and that there was going to be a massive service gap. They recognized that all the big banks and all the companies that were there were going to start to hide behind these new regulations and new rules and stop serving their clients. They were going to deal with the red tape and all these changes and start giving excuses. I'm sorry, customer. I'm sorry, real estate agent. We can't close a loan in 30 days anymore. We can't close a loan in 45 days anymore. We can't close a loan in 60 days anymore because there's just too much that we have to do. And we understand that you have a closing date or you've got a contract date, but we're just doing the very best we can. And they felt that this was going to come. And they decided that when they started this company, they were not going to allow for themselves to have excuses. They saw that when this happened, there would be an opportunity to deliver superior service while everyone else was faltering. So they came up with this concept called realtor-centric. What realtor-centric means is everything that we do is about serving the real estate agent. All of our marketing, all of our products, all of our tools, it's all about making the real estate agent and our referral partners better. When we serve the real estate agent and the real estate agent community at an A+ level, the consumer gets what they need. They get exactly what they need because a real estate agent is looking for excellent service, closing on time, an easy transaction, and they weren't getting it with the big banks. And when a real estate agent gets that, and they're doing these transactions every week, month after month after month, and we do an excellent job for them, we're going to be doing an excellent job for the customer. So that was the first thing the company realized was this service gap that was about to be created. They also believed that the United States was not going to back down from placing the value and the dream of homeownership. They weren't going to let that go aside. They believed that even though the economy was falling and things were slowing down and people were losing jobs, they were going to place a huge high precedence and high value on home ownership. So they believed that programs and things were going to start happening that would allow for the housing market to continue. The housing market had to recover. We saw such a huge downturn from 2008, 9, 10 that it couldn't stay that way. And our owners believed that the government would make changes and make opportunity, and that because of that fact, because of the dream, the American dream of home ownership would stay a high priority to the leadership of our country, there would be opportunity. So they saw opportunity in the dream of home ownership, and they saw opportunity in a service gap, and that proved to be very, very savvy decisions because in 2009, actually it was 2010, 11, and 12, Movement Mortgage was the fastest growing mortgage company in the entire United States. In less than 7 years, they've gone from 10 employees to now pushing 2,000 employees. We're over 1,800 employees right now in 7 years. Incredible growth. Company I'm so proud to be a part of. And huge news here in our state is we just broke ground 2 weeks ago on a new national headquarters. Actually, Casey would get upset with me for calling it a national headquarters because it's our national service center, right? It's our national service center because we are going to be dedicated. That is the place we're going to be dedicated and committed to creating service for you, our customers. So they just broke ground on our National Service Center here in the state of South Carolina, and it's going to immediately bring just about 700 jobs to the state. Governor Nikki Haley was at the groundbreaking ceremony, addressed us, and it was great. It was great to hear her talk and see her involvement with the company. And it's also projected to bring a total of 2,000 jobs to the state in the next few years. So a lot of big things happening with our company, a lot of growth, and it's all been dedicated and focused around the commitment to service to the real estate agent, the commitment and service to the customer. And I want to go a little bit faster, a little bit deeper than that. Everyone can say they've got great customer service. Everyone can say that they're going to focus on it and make sure that that happens. There's one thing that Movement does that's different than all of our competition, and it's the driving force between why we have been better. And I want to say there's two things. The first thing is there's a fundamental, just cultural difference in our company that people care. Whether it's an underwriter or a processor or your loan officer, we are always coming from a position of service. We want to serve our clients, serve our realtor partners so that we want their lives, we want them to be better. We want their businesses to be lifted up. If you're a real estate agent and you're working with Movement Mortgage, we want to lift you up. We want to provide you with a system and tools that are going to make you grow. If you're a customer, we want to learn and identify, why do you want to do a refinance? Why are you purchasing this home? We want to lift you up. We want to lift your family up. And we come from the core of our company, from the top of the house all the way down to the most recently hired employee. That culture is from a place of service. And when we come from a place of service and we're lifting people up with a genuine desire to make them better, it's just an environment that creates growth. So that's the first one, and it's that service attitude. The other one is speed. And this is a little bit more about nuts and bolts of a mortgage. Speed of service. So you might have done a mortgage recently. Maybe you did a purchase mortgage, or maybe you did a refinance. Call in. share 843-556-1250. I know if you're listening, you have suffered through a mortgage transaction. If you've done a mortgage in the last 24 months, the last 3 years, you probably have a story to share. Call in and tell me about it, because I know that most companies out there are dragging their clients through the mud for 30, for 45, for 60 days, only to come within 24 hours of when that closing date's supposed to happen and telling them they're not ready. And the difference there is that Movement Mortgage has made a commitment to try and get all of our mortgages cleared to close in 7 business days. 7 business days. Last year, we hit 69% of all applications were through processing in 7 business days. So what does that mean for the consumer? What does that mean for the real estate agent? Imagine if that when you're out there, you're thinking about that mortgage you did a couple years ago. Imagine if instead of worrying about turning in documents or getting that loan done at the very last minute, imagine if all you had to worry about was packing up your stuff. Well, not everybody needs to close a loan in 7 business days. Sometimes we get calls, and they do, and we do it for them. But typically, people need some time to plan for this move. They sign a contract, and 30 days is pretty standard. We are going to take that application, and we're not doing a different job. We still have the same job that any other company has for a mortgage. There's a lot of work that has to be done. The difference is the other companies drag their feet, and then there's a firestorm of activity right at the end before closing. Our company, the activity and the firestorm is from day one. We are doing the exact same amount of work. The exact same things have to get done, but we're doing it from day one. How do we control that? How do we make that happen? Our processors and our underwriters are all in-house. They are all Movement Mortgage employees, and they're all incentivized to get things done quickly. They're actually paid commission based on how fast and when they accomplish their the job and the task that they're assigned to do. Underwriters are expected to review loan applications in 6 business hours. 6 business hours is when that loan application is expected to be looked at. So if you're out there and you were thinking about getting a house, you're going to reach out to a mortgage lender like myself. You're going to send me your documentation. I'm going to send it into our underwriting team, and 6 business hours later, we have a decision. Think about that. Everyone else, it's a 2-week average. You're waiting there in limbo, waiting for that commitment, that big moment where they say you're approved for your loan. You'll be waiting for weeks. And in the meantime, you're out there spending money. You're spending money on appraisals. You're spending money on inspections, waiting for this approval. What if something didn't get noticed by that initial loan officer, and the underwriter notices something, and you've just spent thousands of dollars, and now you get a denial? That doesn't happen with us, because it goes from our loan officer's hands to the underwriter. The underwriter is expected to review it in 6 business hours. 1 day. 1 day. That's our average. So does it take 2 days sometimes? Sure. Does it take 1 hour sometimes? Yes. So think about the power there. Think about the stress relief that's for you as a consumer, and for you as a realtor if you're out there. The stress relief of having a decision from your clients right off the bat. If you have any questions for me or Mike Gobin, please, I encourage you to call in. Here in the studio, we're live, 843-556-1250. You can reach out to me directly anytime, 843-300-7870. When we get back, we're going to dive into the changes that are about to take place in reverse mortgages. We'll be back.
There's more Mortgage Matters with Bill Sandvig coming up next on the Big Talker, 1250 WTMA. WTMA. You're listening to Mortgage Matters on 1250 WTMA. Once again, here's Movement Mortgage's Bill Sandvig.
Hi, this is Bill Sandvig, and this is Mortgage Matters, and I'm here with Michael Gobin. Mike is a reverse mortgage and a renovation mortgage expert. So if you are out there and you have any questions about mortgages in general or reverse mortgages, we're about to dive into what those are. If you're over the age of 62, and so if you're over the age of 62, you've probably heard this term reverse mortgage, and we're going to talk a little bit more about that. One of the things that I am a huge proponent of, I talk about all the time on the show, is staying local. When you're going into a real estate transaction or you're doing anything, I encourage you to stay local. you can call me for any questions you might have that have anything to do with financial industry. If I don't know the answer, or if I can't help you directly, I promise you I've got an expert here locally who can help you, who I trust, that I know does a good job. Partners like Nick Pavia at Commonwealth Financial Group. Nick's a financial advisor, an excellent good friend of mine. He comes on the show regularly. You can find him at commonwealthfg.com. Jimmy Foti. Jimmy Foti is the owner of a local real estate law firm here, local on Daniel Island. You can find him at www.fotilawfirm.com. That's fotilawfirm.com. And property and casualty partner Andrew Muller of Mappus Insurance. Andrew is the president and owner of Mappus Insurance. And you can find him at mappusinsurance.com, www.mappusinsurance.com. So please call in. If you have any questions, 843-556-1250. We would love to talk to you. We're going to talk about reverse mortgages. If you're over 62 or you're about to hit 62, I know you've heard this phrase, reverse mortgages. I know you've seen the commercials. Maybe you wonder what they are. Maybe you've heard some stereotypes about what they are. So I want to start with you, Mike, and I'm going to just ask that question. What is a reverse mortgage?
Thanks, Bill. Let me tell you a little bit about a reverse mortgage. 62, I'm there, so it's an exciting opportunity for me. But first of all, it's the fastest growing loan in America. 300% increase in reverse mortgages last year alone.
Wow.
If you're 62, you might want to hear this. Most people think of a reverse mortgage is only for people, for example, that have a house now and they want to use some of their equity. You're tapping into it. So what's the big deal when you can typically go borrow money and tap into your equity? The big deal is there's no monthly payments due for the life of you living in that house. No matter how old you are, until you vacate the property, there are no payments of any kind due. There also currently is no qualification for this type loan. If you need to supplement your small Social Security check, if you need to do some massive repairs, any reason at all that you want to take some money out of your house, it's simply based on two components: the age you are today and the value of your property. Let me give you an example. If you have a $200,000 house and you are 62, you should have at least in the vicinity of 50% equity or more and able to participate in the reverse mortgage. So if your balance is very low or below 50%, that's who would typically be the qualifiers for this mortgage. $200,000 house has a $50,000 mortgage. You can borrow up to at least half, if not more, on a reverse mortgage, again with no payments. The no qualifying part I mentioned is there's no income requirements, so you don't have to have a job. There's no credit score requirements. You don't have to have a minimum credit score. However, this might be your time to think about it because all of the rules with HUD are going to change the end of April. When that comes, reverse mortgages will still be available, same guidelines, except they're going to add some additional guidelines. It's all called FA, Financial Assessment. And what that means is you now are going to have to qualify and have enough income specifically to obtain a reverse mortgage. In addition to income, you have to have basic or acceptable credit scores with no seriously delinquent credit. So the opportunity is still there, and it's still going to be continuing, except it's just going to change the rules a little bit tougher, I would say, to obtain it. You need to contact one of us if you need some help finding out, number one, what you qualify for. And again, it's going to be based on your date of birth. We have a calculator. All we use is your date of birth and the value of your house, and you can go ahead and pull the money out of the house with no payments.
So, Michael, how could people reach you if they got questions directly?
Best way to reach me is on my website, which is reversewizard.com, or you can call me direct at 475-1066, and I'll be happy to help answer any questions for you immediately. The reverse mortgage also, I wanted to mention, Bill, is sadly overlooked in another aspect. Most people think of a reverse mortgage is for people that already own a house. So I don't own a house. I'm not interested in reverse. Reverse mortgages have been around for about 28 years. However, there's another type of reverse mortgage called the reverse mortgage purchase. That's for people that are buying a house. Yes, you heard me right. When you're going to buy a house, and you are 62 or older, you can use a reverse mortgage to help you purchase it. Perfect example. Have a couple currently coming in from Ohio. They sold their residence, which was owned free and clear, for $300,000. They wanted to come and retire to Charleston, and they, first of all, said, we don't want a mortgage payment. We want to buy and pay cash. That's a realtor's dream, a cash buyer. However, when they came here with the $300,000, they really could not find anything that they liked. They were hoping, in fact, to live on the water. Well, of course, you're not going to find anything on the water at $300,000, but what you could do is look at it this way. You could find a water view or maybe a house for $600,000 near the water. What that means is you put down just 50% approximately. Again, it's going to vary from 40 to 70%, all based on your date of birth. The older you are, the more you qualify for. Your life expectancy is going to be less. So it's a federal chart calculator that is used to obtain that mortgage. So you can now buy a $600,000 house with $300,000 down and still have what you expected when you moved here from Ohio. No snow shovels, great weather, and I'm living in a $600,000 house with, there you go, folks, 0 payments for as long as you live in the house.
Yeah, I want to recap some of that stuff there, Mike. The first part being the huge changes that are about to take place. The fact that we are going from a non-credit qualifying, non-income qualifying loan to now people are going to have to start qualifying. There are people out there that is going to make the decision for them. Right now, they've got a choice if they want to do a reverse mortgage or not. In a month's time, that choice is going to go away for some of you that are out there. Majority of you will still be able to get you qualified. It shouldn't change things, but there are people out there that you might have been thinking about it on the fence about doing something like this. Your choice and option is about to go away. Now, the other thing I want to highlight is people with reverse mortgages. I think that it's a big factor in that decision is quality of life. It's a quality of life decision because when your income is going down and you're hitting retirement age and you're about to go into a fixed income, the quality of life becomes such an important factor in this decision-making process. And if you've got a certain amount of nest egg, there is an opportunity here with this product to not use the whole nest egg up, to minimize your monthly liabilities, to use that $1,500 mortgage payment that you're thinking you're going to have, to not have one, still get the house you're looking for, keep additional funds in your retirement and investment accounts, and kind of get the best of both worlds. One of the drawbacks that people always bring up in a reverse mortgage is it's a negative amortized loan, which means obviously there's still interest. It's a mortgage, there's interest. And when you're not making payments, the principal balance is going up rather than down. And so people get hesitant about that fact, and they say, well, I don't want that negative amortizing loan. I want to be able to leave, the house to the kids. It's paid off. I'm telling you, it's this day and age, your children are not looking for the huge windfall. They're not planning for it. They're not expecting it. And your kids, they want you to have the quality of life in the last 30 years or in your retirement age way more than they want to make sure that they get that equity out of your house.
That's a true statement, Bill. The quality of life is the top factor that I enjoy helping people with these mortgages. Most children today have their own 401ks. They're more interested in their parents having everything that they need to live out their life in a comfortable way. I actually have somebody I'm working with right now that was in a nursing home. They don't like it. They can't stand not being in their own house. They rented it out, but guess what? The lease is up. They're actually taking a reverse mortgage on their home and moving back into their home, and they're going to make it handicap accessible with wheelchair ramps, widening of door jambs, and they're going to use it to enjoy all of their remaining days with that quality of life in their own house.
Yeah, I think it's a huge important distinction is the next generation, they're not looking for the equity in your house. If you left it to them, they're probably just going to sell it anyways the second it hits them. So improve your quality of life, get more information about this reverse mortgage product, call us. We got another half hour of the show. Call us, ask questions directly to Mike on a unique opportunity, 843-556-1250. If you have any questions at all. And we just kind of finished going over briefly the reverse mortgages. I want to touch it again when we come back. Some of the changes and some of the significance about that. And then we're going to break topic and go into renovation loans, what renovation loans are, how you can use them, how you can use them as an investor. And when we get back, we'll talk a little bit more about that. We'll talk a little bit more about Mike. I'm Bill Sandvig, and we're on 1250 WTMA, the Big Talker, and this is Mortgage Matters.
Bill Sandvig has more Mortgage Matters straight ahead on 1250 WTMA, the Big Talker.
1250 WTMA.
This is Mortgage Matters on 1250 WTMA. From Movement Mortgage, here's Bill Sandvig.
All right, we are talking live today, so if you've got any questions, please call in at 843-556-1250. That's 843-556-1250. Call in with any questions you might have about anything mortgage related, anything finance related. I'm happy to talk to you about it and address any questions you have. I'm here in the studio with Mike Gobin. Mike is a reverse mortgage and renovation mortgage expert. He specializes in only those two products. The most knowledgeable guy I know about these two products. And so we just spent the last segment talking about reverse mortgages. So I want to highlight 2 points. The first one is that the rules are about to change. If you are on the fence about doing a reverse mortgage, you've got about 30 days before the rules change, and it'll no longer be a completely non-credit, non-income qualifying loan. I don't really know all the exact specific changes that are taking place. They're still kind of coming out. But we do know that there is going to be a change, and it could impact you. You might think you have time. You might think that you have a choice, but that choice could very well be going away. The other thing I want to highlight is the kind of the negative or the negative connotation about reverse mortgages is that they are a negative amortizing loan, and you lose equity in your house. And if you can't look at it that way for a couple of reasons. One main reason why you can't look at it that way is mortgage interest rates are cheap. So you do a reverse mortgage, the interest rate that mortgage is compounding on is cheap. It could actually be a strong financial investment. If you get a between 4 and 4.5% rate on a reverse mortgage, and you take $150,000 of equity out of your house with that reverse mortgage, you still don't have to make a mortgage payment. You put that money in another investment, and it could get you additional residual income. It's just a brainstorming idea. Think about it this way. Let's say you have a $400,000 house and a $200,000 or a $100,000 mortgage, and you've got 5 years left on this mortgage, and it's a $1,500 payment and or a $2,000 payment because you've been paying on it for a while, and you decide you want to do a reverse mortgage. Well, that $2,000 a month payment goes away now instead of 5 years from now, right? So that's $2,000 gone, and you get $100,000 of equity out of the house. You take that $100,000, you go buy a small investment property, and that investment property that's now is cash free or mortgage free. It's $1,000 in rent. In one moment, your income and household income, your budget just changed by $3,000 by doing a reverse mortgage in that scenario. $3,000, almost $40,000 a year. Think about how that might change your life. If you got a question about how that works, give me a call, 843-300-7870. Give Mike a call. Mike, what's your cell phone number?
843-475-1066.
So that was just a quick scenario about how a reverse mortgage could play out and really change your life. Call us if you have any questions about that. Now I want to completely do a 180 on us. We're going to move off of reverse mortgages. We're going to talk about renovation loans. Renovation loans are, you've probably heard about them. We get the question all the time. Is there a way that I could buy this house and fix it up and kind of roll that money into the mortgage, and so I don't have to pay for it out of pocket? Or, how can I do that? And the answer to that question is renovation loans. And Mike is the expert. He does more renovation loans than anyone I know. He's done more renovation loans than anyone I know in the business. And Mike, talk to us a little bit about what you feel are the main advantages, the main reasons why someone would want to do a renovation mortgage.
Well, Bill, a renovation mortgage is actually one loan to do two things. You can purchase a house that needs repair and add all of the repair work right into that loan. There's several different programs that you can use to do that, but the best is we can go to 110% of the after improved value. Think about it this way. Example, if you're in a house, for example, and you want to redo your kitchen, you might need $30,000 or $40,000, and the first thought that comes to mind is what? You're going to go get an equity line at the bank. The bank's going to lend you money based on the value of your home, but they're also typically going to cap it at 80% of what your current value is. What we do is we use the pretend or after improved value and allow you to go up to 110% of that. You have a lot more borrowing power. Everything that you want done to the house can be done and put into the house. All you need is a little bit of vision. The big thing about the renovation product, people think that it's only good for houses that they may buy that are falling to the ground. They're bank-owned or HUD-owned, and they need a ton of work. You can actually use a renovation loan on any house, no matter what condition it's in. If you simply are looking to purchase a house and you can't tell the difference between the two because one is short a bathroom and the other may be short a screen porch, well, guess what? If they're in perfect condition, just add in the bathroom or the porch to that loan and do it in one swift purchase, one product.
I love that. I want to go back to the numbers. I'm a numbers guy. I want to quantify that a little bit with a scenario about the equity in your house. So you're thinking about completely renovating your kitchens and bathrooms. And we're going to go with that $200,000 house again. And you call up the bank and say, I want to renovate my kitchen. I want to renovate my bathrooms. And I'd like to get an equity line. And the bank says, great. Let's put an application in. How much balance do you have on your loan? Well, they're only going to go up to, you could probably find 90% loan to value if it's a primary residence out there. They're going to go up to 90% of the value of your house. So that means if you have a $180,000 mortgage, that's it. There's no more room. $180,000, that's 90% of the $200,000 value, and you don't have any room to do any of that work. If you do a renovation loan and you get that appraisal at $200,000 on the house, well, they're going to go up to 110% of that. That's the current value, right? So they're going to
use the after improved.
They're going to do the after improved value. So let's say you want to put $40,000 into the kitchen and the bathrooms, and you expect that this upgrading and remodeling is going to get you $30,000 of equity on the back end. So you're going to spend 40, you're going to get 30. Well, when that appraiser comes in, they're going to say, okay, the final value is $230,000, and you can borrow up to 110% of that. That puts you at $253,000. So for this scenario, the person who has a $200,000 house and a $180,000 loan, equity line, no money. Renovation loan,
that's exactly
$73,000 of renovation opportunity. $73,000 of renovation opportunity for the exact same house. Renovation loan, I explain it to people this way a lot. It is the cheapest way to finance a renovation. There's no cheaper way to finance a renovation because if you go to Lowe's and get a credit card, I promise you the interest rate's higher than a renovation loan. And with interest rates so low, and you get to stretch that payment out over 30 years, there's nowhere else that you can take that renovation cost, get a ridiculously low interest rate, and stretch that payment out over that length of time. $50,000 of renovation on in mortgage terms over 30 years, you're talking about less than $200 a month difference in your payment for doing $50,000. So it's less than $200 a month to improve your house, but with $50,000 of cost. So, all right, back to you. So, what with this reverse mortgage, what would you say is like the most typical reason that people do these types of loans?
You mean renovation mortgage?
Yeah,
on a renovation mortgage, typically to make the house livable, if you have a little bit of vision, you can get in. Also, young people, first-time purchase, have a cash impaired situation where they cannot spend unlimited funds to fix a house up, or also purchase appliances. This particular loan, the renovation loan program, allows a home buyer to add in washer, dryer, refrigerator, all of the upgrades into the loan and make it one single product. The down payment on the 203K, which is the nickname for the HUD program, is only 3.5% on the total package. And the conventional package, it's 5% down, but there's nothing that you cannot add in using one of these loans to make the house perfect. If you're listing your house and you're afraid you are not going to be able to make the repairs needed or necessary, and an agent is having concern that they might not move your house quick enough, ask your agent to market your house as a renovation option only and let the buyer put in the new kitchens and floors and so forth, and you will not have to spend the money to sell your house on an as-is basis. The time to sell or list your house is now. The spring season is upon us, and there's a very short inventory compared to last year, so the sooner you can get it on, your realtors need to know about this product as well.
Yeah, thank you, Mike. So that was a lot of information about reverse mortgages and renovation loans. If you have any questions for us while we're in the studio, we are live, 843-556-1250. This is Bill Sandvig on Mortgage Matters, and this is 1250 WTMA, the Big Talker. We'll be right back to wrap the show up.
Mortgage Matters continues next on Charleston's Big Talker, WTMA. Now, let's get back to Mortgage Matters on the Big Talker. From Movement Mortgage, here's Bill Sandvig.
This is Mortgage Matters, and if you've got any questions for Mike Gobin and I, Mike's a reverse and renovation mortgage specialist. If you have any questions about mortgages or finance or real estate, please give us a call, 843-556-1250. We're here on 1250 WTMA, the Big Talker, talking about all things mortgages and mortgage matters. So we just spent the last half hour of the show talking about two very specific products, the reverse mortgage and the renovation mortgage, and a lot of great information. Highlighting probably the biggest piece of information about the reverse mortgage is the rules are about to change. If you're thinking about getting a reverse mortgage, if you've been thinking about it and you're over the age of 62, it is about to go from a non-credit, non-income qualifying loan to being a qualifying loan. That the net is still going to be relatively wide, but there are people out there right now who that option for you is going to go away. Mike, we were talking during the break and a little bit about the two products, and I wanted you to share with me a story about a renovation or a reverse mortgage loan where you've been involved with it and how that has impacted maybe one of your past clients' lives.
Sure. The best one I can think of, Bill, is a couple in Hilton Head, South Carolina. Their son wanted to buy a restaurant. He needed $400,000 to do it, and he only had $200,000. He went to a local bank, and he asked to borrow a commercial loan at 7.5%. For whatever reason, he was denied for that $200,000, and he went to mom and dad, and what do you think he asked? Mom, can you co-sign and let me get $200,000 based on your strength? Mom and dad's answer was very simple. Son, we love you, but we can't do that. We've worked too hard to get our house almost paid off, and I'm not in a position to take on any payments if you cannot make them. But I tell you what I will do. I will get a reverse mortgage, which I've been checking on, at 2 7/8%. However, I want you to make the payments anyway, even though no payments are due. Yes, you can make payments on a reverse mortgage if you want to at least pay the interest and not have that negative amortization Bill was talking about. So the mother did that. She went and got a $200,000 reverse mortgage loan. Actually, she took out a $400,000 line of credit and gave him two. The son made the payments anyway, and the condition was this. She told him, son, I'm going to tell your sister right now that I gave you $200,000 of our estate. And in case anything happens to us, she's going to get the first $200,000. So what am I getting to? In this situation, it was nothing but a win-win for everybody. Reverse mortgages are not just for people that may be in trouble or have to use equity. Reverse mortgages are to do a lot of things like extinguish your mortgage period or help family members in advance before that equity is available when you pass. So the situation that happened was he has a very, very successful, one of the largest franchise chains in Hilton Head. He paid off the $200,000 loan at 2 7/8% interest, and there is no recourse that mother would have had to make those payments if the restaurant went belly up, because there's no payments due as long as you live in the house. So it was a win-win situation, helping children out by using that reverse product.
That's a great example, because that one is the number one thing that I've heard people say is, well, I don't want to, lose this equity that I've built in my house because that's going to go to my children. And in this case, that's what happened is the equity in the house, the money that they're holding on to give to their children and grandchildren went to the children and grandchildren. They didn't have to wait for it. And the guy was able to make a real difference in his family's life by starting up what ended up being a very successful restaurant chain. Okay, switch. Same question on the renovation loan. Give me an example of a renovation deal that you've been involved with that has made a difference.
Renovation options are beyond expectation. If you have a little bit of vision, as I said, you can come up with a creative idea to use this plan and really build some equity. Let me tell you my situation personally. Whenever my wife and I go to look at a house, the first thing she does is open the door and looks in. If she doesn't like the look of it, the answer is, ooh, I don't like it, let's move on. I love the ooh houses. As ooier, the better it can be. There was an ooey house in Mount Pleasant in the Old Village area. It was absolutely dilapidated. The couple that owned the house in the Old Village were in their late 80s. The house was not maintained for over 40 years. They both passed away within a month of each other, and the house was sold for $225,000. A steal until you found out how much work the house needed. On the conventional renovation program, we can go up to $417,000. So a very enterprising young couple bought this house for $225,000, and they borrowed another $200,000. That's $425,000. Put down their 5%, and the house appraised when it was completed at $695,000. That's what you call an equity capture. That's unbelievable.
Let me recapture that statement. So they bought a house for $225,000, put $200,000 worth of work into it, and the rules here on these products are limitless. They are really limitless. I mean, you can almost knock a house down to its foundation and build it up brand new with extra bedrooms, extra bathrooms. So they did something quite extreme, and at the end of it, a month later, after they're moving into the house, they've got $300,000 of equity.
That's
Incredible.
exactly right.
Incredible. Great story about building equity in a renovation, using a renovation loan. That's an incredible example. $300,000 in their pocket for doing a $417,000 loan and having a little bit of vision. I love that. Absolutely love it. So, we are just about done with the show here, and I wanted to thank you, Mike, for coming on the show.
Thanks for having me, Bill. It was a pleasure, and thanks for talking about the great company, Movement Mortgage, that we work for. It's a pleasure to be here and talk with you.
Yeah, it's been great. I've learned a lot. I'm sure a lot of people out there have learned a lot. Mike, share with everybody how they can reach you again if they've got any questions.
Best way to reach me is at my two websites, Reno Wizard, that's RENO Wizard.com, or Reverse Wizard.com, and my cell phone number is 843-475-1066. Call me with any questions.
And my name's Bill Sandvig. You can find me at my website, www.lowcountrylending.com, and I am happy to talk to you guys about any questions you might have during the week. Call my cell phone direct line, 843-300-7870. My name's Bill Sandvig. I'm the market leader for Movement Mortgage on the South Carolina coast. We have been the fastest growing mortgage company in the country for the last 7 years, and we are not stopping growing. It's thanks to people like you, thanks to our realtor partners out there, thank you to all the builder partners that we have. Very grateful to be able to serve you and serve this community. Again, if you have any questions, 843-300-7870. I'm Bill Sandvig, and this is Mortgage Matters.
You've been listening to Mortgage Matters with Bill Sandvig from Movement Mortgage. Call Bill for your mortgage needs at 843-300-7870. That's 843-300-7870. Listen again next week at this time for another edition of Mortgage Matters with Bill Sandvig on 1250 WTMA.